JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 25th of February 2021. So yeah, well, welcome everyone, guys. Welcome to this Thursday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, the first one I want to pick up here is the German DAX, and looking at this picture, you can see that the index drifted lower today. It did push initially above this 14,026 territory, the one that I kept talking about, but it failed near this downside line. Excuse me. Okay, there we go. So it failed near this downside line, and yep, as you can see, it drifted back down. However, once again, the 21-day EMA is the kind of acting as a magnet and acting as a support, and at the same time, it sometimes is resistance. So basically, long story short, the price continues to oscillate around that 21-day EMA, and this is what I kept saying, that in a way, for now, as long as it kind of stays, or should I say, continues to trade above and below this 21-day EMA, or in other words, it continues to oscillate around it, well, I mean, I will kind of take a bit of a careful approach here, and maybe even a neutral one. So probably the fact that it initially was looking quite positive when initially it popped above this 14,026 territory, but now given it's back below that 14,000 mark, well, I mean, there is of course always a possibility of seeing further declines. However, as I mentioned to you before, for me to maybe get a little bit more excited with, let's say, the downside, I would like to see the daily candle dropping below this hurdle right here, this 13,830 zone. And not only that, I would like to see that daily candle staying below it as well. So just to kind of strengthen the downside scenario, because as you can see, we kept getting these overshoots here, but didn't really get that daily candle staying below this. So yeah, for now, let's take a bit of a careful approach here and probably wait for either a break below the 13,830 zone here, or for a violation of this downside line, because again, we've broken this 14,026 zone, but we didn't really go anywhere. So now what we could do here, just to simplify our life, we could keep an eye on today's high, the current highest point of today, near the 14,051, and a nice good pop above it might also kind of push the price above the downside line, but let's not get ahead of ourselves. NASDAQ 100. So the index yesterday closed in positive territory, so everything's kind of working according to the idea that I mentioned in the beginning of this week, where I was saying that in a way we could see a drift lower, and given that we managed to break this upside line, of course there was a chance for this one to drift to the downside here. We did reach this area, the 12,758 territory, from where On Tuesday, the index rebounded and kind of made its way higher. Yesterday, we saw a continuation move higher. But if you remember what I was saying previously, that be very careful, because let's see if this highlighted area right here is not going to play out as a potential head and shoulders, or as a potential neckline of a head and shoulders pattern, because we have our left shoulder right here, we have our head. Will this be the right shoulder? Well, we'll just have to wait and see, because for now, in a way, yes, we are kind of drifting back up, but can we actually go further north here? Well, we'll have to just wait and see. In order to get a little bit more excited with higher levels, I would say, or should I say even maybe a move back to the all-time high, well, for that, I would need to see the index climbing back above this upside line, and maybe even actually pushing above the 13,700 zone right here. This way, yep, more buyers could join in. But all this territory right here will be definitely the one to watch, because well, of course, we have that upside line which could get tested from underneath. We have the 21-day EMA. We have some key resistance levels here, like for example the 13,477 here, marked by the low of the 18th of February, or we have the high of the, well, the potential left shoulder here, which is roughly around the 13,563. So again, a lot of things to consider here, but let's first, of course, let's see how this is going to play out. Now, jumping into DXY and the dollar index, and I've talked about this one this morning, and yep, we are finally seeing this drop below this 89.96 zone. So of course, now this opens the door towards lower areas, but what I would like to say now is that I would like to see the daily candle staying below it, because what I don't want to get here is a potential false breakout, and we have seen these happening several times. So that's why, I mean, for me, the a little bit more confirmation could come here if we would get the daily candle staying below the 89.96 zone. Of course, then still there is a chance for this one to reverse back up, but of course, we're always evaluating the probability. So could be a greater probability that the index could drift lower here. And my next target will be this lowest point of January near the 89.23 zone. Now, jumping into silver, silver, of course, is kind of enjoying the fact that dollar index is drifting to the downside, or should I say, silver bulls are enjoying the fact that the DXY is drifting lower. However, still this barrier, the 27.92, is kind of somehow providing resistance. So it did the same thing yesterday, and now we're having the same thing today. So although we did get an overshoot here initially, but you can see the bears kind of stepped in very quickly here and started pushing the commodity lower. That said, we're not far from this barrier here, so just maybe we could see this one pushing back up here. But if you're not comfortable with kind of this level here, you could stick to the current highest point of this week near the 28.32 zone. A nice good pop above it may open the door towards these higher levels, and we could maybe even aim for the highest point of August. So yep, for now, keep your eyes on that one. Jumping into Bitcoin, and here you can see that yes, we are pushing higher, so the weaker dollar is kind of rolling into rolling in favor of the bulls here, Bitcoin bulls, and yep, we managed to reach that 50% retracement on the Fibonacci. This is where the rate is currently stuck at. The reason why I'm saying it's a rate, because we're looking at BTC against the USD. I mean, we're not looking at BTC against Euro or any other currency. So so yeah, BTC USD here, we can see that it is stuck here near this 50% retracement on the Fibonacci. Slightly above that is our next target, the 61.8% retracement, and that's roughly around the 53,232 zone, approximately around there. And yeah, let's see if we can reach that. I mean, for now, we are leaning a little bit more towards the upside maybe, but not much. I mean, I'm not going to say that this will travel all the way here towards these all-time highs. It could, of course, but just to be on the safe side, I will go step by step on this one. AUDNZD. So I talked about this one yesterday, and basically I've mentioned that if this hurdle right here, this 1.0718, provides good support, we might see a nice rebound and maybe a push back up. But if it gets broken and if it drifts lower here, then this area here up until the 200-day EMA will be somewhat of a neutral one for me. And I'm still neutral because although we had a push higher here today, yes, we can see that the pair is trying to climb back above this 1.0718, but to be honest, I mean, it's currently getting a hold up by this 21-day EMA. So in other words, for now, I will kind of stay careful, stay neutral, because for me, I would like to see the daily candle kind of ending above this 21-day EMA here, and then yes, we could go for some higher levels. But here, it still has a chance to drift back down, especially if this 21-day EMA continues to provide resistance. And yep, we could make our way here towards the 100-day EMA once again, and or even to the 200-day EMA near, which is also near this 1.0673 territory. Now, if a break of this hurdle, now this is where I'll get a little bit more excited and more comfortable with lower areas, and yes, then we could go for a deeper decline here, maybe even towards the current lowest point of February. But again, let's not get ahead of ourselves. Let's first wait, because this one could be quite an interesting one either way here. So I'll pick up on this one tomorrow just to see how everything's playing out. USDCAD. So weaker dollar, stronger Canadian dollar. Weaker US dollar, stronger Canadian dollar, and all in this mixture, you get this result here. You have USDCAD falling off the cliff, and moving below this 1.2590 zone. I talked about this, guys, and look at this beautiful move here, and we managed to reach this 1.2527 territory. That was my next target. So yep, that's a good result, I would say. But as you can see, it continues to slide. Now for this, we need to jump into probably better to jump into a monthly chart, or actually not a weekly, but rather stick to the monthly chart. So that's the game plan here. I mean, that's the situation here. I mean, as you can see on the monthly chart, we are approaching this 200-day EMA, and in a way, this is the level that this is the area that we will be probably targeting if this slide continues. Now, this 200-day EMA is roughly around the 1.2380 zone, not far from there. Yeah, I mean, for now, that could be our target. That could be our little kind of game plan here, and especially if the rate continues to trade below the lowest point of April of 2018, which is roughly around this 1.2527 zone right here, the one that I've talked about previously. So if it stays below that area, then my next target is this 200-day EMA. So, and then we'll take it from there, of course. Jumping into EURGBP, now this is something that I talked about this morning, and let me just jump back into a daily. So this morning I told you guys to keep an eye on this little high here, the high of yesterday, and what I was saying, we were still below this, we were still hanging around the 0.86 territory, and what I was saying that in a way, given that we already had a decent decline, we might see maybe a bit of a recovery, especially if the rate travels back above the 0.8616 territory. So, which is the high of yesterday. And yep, we had a nice pop above it, and this opened the door towards further acceleration here. So we've managed to we managed to kind of recover a good portion of this week's losses. If we take a look at the weekly candle here, you can see that we could be forming a possible hammer here. So, which means that this could be seen as a potential reversal signal going in, yep, it could be interesting going into next week. But of course, before we could, let's say, aim for some higher levels, still a break of this downside line is needed. So I'm not going to give you a specific level yet, because again, it's a bit of a tricky one here. I want to see how this or should I say, if this eventually will reach this downside line. If it does, then the big question here is, can it push further north? Well, I mean, that's why I'm gonna, for now, I'm gonna leave it here. My target, I will say, my target is this downside line drawn from the high of the 21st of December, and then I will take it from there. I'll pick up on this one because, like I said, it could be quite interesting. And finally, EURUSD. So, beautiful pop. There we go. So, I've talked a lot about this pair, and I mean, actually, in every my video, I speak about this pair. And the idea was that, I mean, we could see a break of this so-called neckline, which we finally got. And today, when we were still hanging above, or should I say not above, but slightly, just fractionally above this area here, above this downside line, above this neckline. What I said is that I'm leaning a little bit more towards the upside because, again, we were trading above this neckline. So, and yep, we are now seeing a good result here. We're pushing further north. My next target is, of course, this 1.234950 zone right here. But to be honest, right now, I would like to see where this daily candle is going to end and where it's going to stay today. Because, yes, there is a good potential for this one to drift higher, but maybe just maybe we'll get a bit of a corrective move lower, and then, yep, we could maybe take advantage of a small little throwback and then kind of jump in on this one again. But let's, like I said, let's wait and see. For now, everything's looking quite positive. The fact that it's trading above this 1.2210 zone right here, and of course, that's kind of giving a bit more positivity here. So if it stays above this area, then yes, I'm going to continue targeting the upside. If in general, I'm going to continue targeting the upside as long as it remains above the so-called neckline here. If it starts dropping back below this, this is where my neutral territory is, and if it starts dropping below this little area here, 1.2023, that's where I'm going to get a little bit more excited with the downside. Now, don't get me wrong. I mean, I might reevaluate this level later on, depending on how everything's going to trade, because what we could start looking at, and I didn't want to kind of overwhelm you with the different lines here, but maybe something like this we could be keeping an eye on here, and just maybe we could be seeing something like this here as well. But again, it's with this last idea, I mean, it's too early to talk about that. But again, let's see how this is going to play out. For now, it is how it is. Leaning a little bit more towards the upside, and yeah, like I said, let's see where we will probably get a little retracement, but where will that retracement be? We'll just have to wait and see, guys. So today, I mean, I would say if you've missed this jump here, I would say leave it for today. We can come back to it tomorrow and try to find a new level or spot here, and then yeah, we'll take it from there. So I hope you found it useful. This was a quick review of certain instruments that I looked at this morning, some new ones, and yeah, guys, I hope you found it useful. Thank you very much for joining in and watching this one till the end. I really appreciate your time, and if you want to join my video tomorrow morning, my Traders Espresso, as always, 7 o'clock GMT time. Tomorrow, just to let you know as well that there won't be any Traders Tea time, so there will be the Traders Espresso at 7 o'clock GMT. So yep, bye for now, guys. Stay safe, and I'll see you later.